Hello. Before watching this recording, you should have downloaded the MCQ questions from Moodle and had an attempt at all of them. This recording will go through the workings for each of the questions. So firstly, we have the Highlow method. This is the method used to separate out fixed and variable costs. So the first thing that you need to do is have a look at the information. So we're told that when there are 3,000 units, the total cost is £28,100, and when we have 4,500 units, the total cost is £38,900. We're asked to work out the variable cost. So what we do is two columns, units and costs. Take the highest number of units and the cost, and the lowest number of units and the cost. Take them away. So 4,500 minus 3,000 leaves us with 1,500. Taken away the costs, the difference in the two costs, 10,800. To work out the variable cost, it's the change in the costs divided by the change in the units. So that's 10,800 divided by 1,500, which equals £7.20. Okay, so answer A. We're then asked to work out the total fixed costs. So we know the variable cost. So we go back to either level of output. We can use the 4,500 units or we can use the 3,000 units. We will get the same answer for the fixed costs. So at 4,500 units, the total variable cost will be 4,500 times £7.20, which comes to £32,400. We also know that at 4,500 units, the total cost is £38,900. So that's this cost. The difference between these two figures is the fixed cost. So the difference between the two figures is £6,500. Answer C. Question 3 asks us to work out what the total cost would be of making 3,800 units. So the total cost is the fixed cost and the variable cost. So the variable cost, 3,800 units. We know the variable cost is £7.20 a unit. So that gives us 27,360. The fixed cost we've just worked out to be £6,500. So the total cost, those two added together, 33,860. So the answer to question 3 is B. So question 4 and 5 is asking you to repeat that. So it's another example of high-low. In your actual exam, you would not get several high-low questions, but this is just for practice. So apply the same method. We take the units and the cost. So 8,000 units, cost is £50,000. 7,000 units, the cost is £45,000. Take them away. And remember, the variable cost is the change in the costs divided by the change in the units. So the variable cost is £5,000 divided by 1,000 means it is £5 a unit. So answer A. For the fixed cost, we go back to either level of output. So I'm going to use the highest one. So at 8,000 units, the total variable cost will be 8,000 units times £5 a unit, which gives us £40,000. We also know that at 8,000 units, the total costs are £50,000. So if 40,000 is variable, the difference of £10,000 is fixed. So our fixed cost is £10,000. So question 5, answer B. So that's a couple of examples of the high-low method. Now we're going to look at the process costing multiple choice questions. So the first question, question 6, we've been given some data for a single process. We've been told what the input is, the output, the work in progress and the normal loss. And we're asked to work out any abnormal gain or abnormal losses. With your process costing questions, the physical flow is very useful. So the physical flow is input is equal to the output plus the normal loss plus the work in progress plus abnormal loss or minus an abnormal gain. Now the physical flow is purely quantities, never put values into this. So what we know from the question is the input is 20,000 kilos. The output is 12,000 kilos. Normal loss is 12%. The normal loss percentage is always worked on the input. So that is 12% of 20,000. So 12% of 20,000 is 2,400. The work in progress, we've been told, is 3,000 kilos. And we're asked to work out either the abnormal loss or abnormal gain. So it's the figure that we need to make the two sides of the physical flow balance. So what we need is on the right hand side of the equal sign, all of this has to add up to what's on the left hand side of the equal sign. So it all has to add up to 20,000. So at the moment we've got 12,000 plus 2,400, so we've got 14,400 plus 3,000 is 17,400. So we need to add to that to make it equal to 20,000. And we need to add 2,600. Now this adds up to 20,000. Because we've added it, it's an abnormal loss. So we've got an abnormal loss of 2,600. If we'd had to take away an amount, it would have been a gain. So the answer to this question, an abnormal loss of 2,600, which is answer B. So important things to remember there is always use your physical flow, and the normal loss is always calculated as a percentage of the input. Right, question 7. Products made through a single process. We've been given details. Normal losses have a scrap value of 50p per kilo. What is the value of the normal loss within this process? So we need to work out firstly what the normal loss is. So there's lots of information given in this question that we don't actually need, and that will happen sometimes. It's testing to see if you can pick out just the relevant information. So we know the normal loss is 5% of the input. So our input is 16,000 kilos. Normal loss is 5% of the input, so 5% of 16,000. So the normal loss is 800 kilos, 5% of 16,000 kilos. And normal losses have a scrap value of 50p. So times it by 50p, and we've got £400. So the value of the normal loss, £400. Answer D. Question 8 is just asking us to define a byproduct. And we came across byproducts when we looked at joint products. And a byproduct is a product which has a much lower sales value than the main product. So, A. Question 9, another process costing question. We're asked to work out the value of the abnormal loss. So what we've been told is that 10,000 litres have been put into the process, which cost £25,000. We've got our actual output, 9,200 litres. We've got labour and overhead costs. We've got normal loss is expected to be 5% of the input. And we're asked to value the abnormal loss. Now we haven't been told what the abnormal loss is, so the first thing to do is work it out. So we're going back to the physical flow. So remember the physical flow, the input has to equal the output plus the normal loss plus work in progress plus abnormal loss, or minus again, but obviously we know there's a loss this time because we're being asked to work out the value of it. So we input 10,000 litres. Remember the physical flow is only quantities. We're not interested in the values at the moment. We'll use those in a minute. The output was 9,200. The normal loss is 5% of the input. So that's 5% of 10,000. So that's 500. There is no work in progress. So to make this balance, at the moment, it adds up to 9,700 litres. We need it to add up to 10,000, so we've got to add another 300. So we know our abnormal loss is 300 litres. Now we need to put a value to that abnormal loss. So we need to know what the cost is per litre. So this is where the formula comes in that you do need to know, whether for the multiple choice questions or if there's a longer process costing question. So to work out the cost per unit, it's your input costs minus the scrap value of normal loss and divide all of that by your expected output. So our input costs are all the costs that go into the process. So that's material, labour and overheads. So we've got £25,000 of material and we've got labour and overheads. Don't know what happened there. Labour and overheads of £12,000. So our input costs, 25,000 plus 12,000, £37,000. So input costs 37,000. Scrap value of normal loss, we haven't been given any. So 0. Expected output. Note the word expected. It's not the actual output, which was 9,200. We want to know what we expected the output to be. Well, what we know is that we were inputting 10,000 litres. And we have a normal loss of 500 litres. Now your normal loss, if you remember the definition of a normal loss, is a loss that is expected from the process. So if we input 10,000 and we expect to lose 500, then our output we would have expected to be 9,500. So that's the 10,000 that we input minus the 500 normal loss. So our cost per unit, £37,000 minus 0 divided by 9,500 gives us 3.895 per litre. So that is what we can use to value our abnormal loss. So the abnormal loss is 300 litres times 3.895, which gives us 1168 to the nearest whole figure, which is answer C. While we're looking at this question, if I can just remind you of a few things. If you were asked to value the output, so the 9,200 litres, that would also be valued at 3.895 a litre. If you were asked to value the normal loss, remember the normal loss is only ever valued at 0 or scrap value. In this case, we're not given a scrap value, so our normal loss would be valued at 0. In this particular question, there was no work in progress. When you don't have a work in progress, you can use this formula that we've just used. If there was a work in progress, we can't use this formula, cost per unit formula. Instead, you need to go through the process of working out the equivalent units. So if you're a bit unsure on that, I suggest you go back and have a look in your workbook. Right, next section of questions relate to budgeting. So, the production budget. When we're working out our production budget, we need to consider what we're selling, how much we already have in stock, which is our opening stock, and how many we want to keep in stock, which is our closing stock. So for our production budget, we are considering sales, closing stock and opening stock. So we know what we're selling, 9,800 units. There are currently 700 units in stock, so that's our opening stock. And we require closing stock to be 12% higher than our opening stock. So our opening stock is 700, we want 12% higher, so we want to add on a further 12%, gives us 784. So our production budget is the sales plus closing stock minus opening stock, which gives you 9,884. So the answer to this question is A. The next question is asking us how much material will be required. So that's the usage budget. So if you think about your budgets, we discussed the order in which they're produced. You have your production budget. From the production budget you can do your usage. From your material usage you can work out your material purchases. If you ask for a labour budget, that also has to follow on from your production budget. So here we're asked for the usage, how much material will be required, so how much material will be used. Now to work out what we're going to use, we need to know what we're going to produce. So we firstly need to do the production budget. So as in question 10, our production budget starts with our sales. So sales are 20,000. Is there any closing stock to add on? There is a closing stock of 4,000. And is there an opening stock to take off? There is an opening stock of 1,000. So we're going to produce 23,000 units. So that's our production budget. How much material are we going to use? Well, if we go back to the question, the company produces a product which requires 3 kilos of material per unit. So if we're producing 23,000 units, each one needing 3 kilos, then our usage is 69,000 kilos. So the answer to question 11 is D. Now we come to question 12. So a company manufactures and sells one product which requires 5 kilos of raw material. They hold no raw material stocks. They purchase raw material as and when required. Budgeted data, what we're selling, our opening stock of finished goods, our closing stock, and we're asked for the material purchases budget. Okay, so a reminder of what I've just said. Production budget comes first, then material usage, then material purchases. And if we were asked for a labour budget, you work that from your production budget as well. So here we're asked for the material purchases. So we're going to have to go through these stages. We're going to have to do our production budget first. So we've already done this twice. So what are we selling? 90,000. Is there any closing stock? There is a closing inventory of 11,000. is there any opening stock? We've got an opening stock of 12,000. So we'll take off the opening stock. So we're producing 89,000 units. And remember, your production budget is always the production of your actual unit, your finished product. So how much material do we need? Because our usage budget has to follow. So material usage. We're told that each product requires 5 kilos. So if we're doing 89,000 of them, we will use 89,000 times 5, which is equal to 445,000 kilos. So that's our material usage budget. Your material purchase starts off with your usage, which in this example is 445,000 kilos. Then, in the same way as we considered the stocks in production, you have to consider the stocks in your purchase budget. Is there any stocks of raw material at the start of the period? Is there a requirement to have any stocks of raw materials at the end of the period? So we add on closing stock of material and we take off opening stocks of the material. So remember, these are the stocks of material, not units of finished goods. Now if we go back to the question, we're told that the company holds no raw material stocks. So our closing stock of raw material, 0. Our opening stock of raw material, 0. So our purchase budget, 445,000, which is answer C. So that's taken a look at some of the functional budgets. So we've seen here production budgets, we've seen here material usage budget, we've seen here the material purchase budget. That purchase budget is the quantity of material we need to purchase. If the question asked us for the value, then we would just have to multiply that by how much that material costs per kilo. As I said, if there was a question asking about labour, then you would go back to your production budget, look at how many units you are producing, and then multiply that by how many hours it takes to produce a unit, and you would have a labour budget. We haven't yet looked at cash budgets, and the next two questions, 13 and 14, are both cash budget questions. So question 13, company made sales of £50,000 in January, 40,000 in February, 45,000 in March. Sales are made on credit and customers usually pay 40% in the month of sale and 60% in the month after. So in the cash budget, the sales receipts for February should be recorded as, and we've got 4 choices. Now I can't emphasize enough the best approach to these sort of questions, especially if a cash budget was a longer question where the payment terms would be a bit more complicated. you need to draw up a small table. Within this table, we will have the sales. So we know that our sales in January are £50,000. In February, they are £40,000. And in March, they are £45,000. So those are our sales. Then we put these same months across the top. So we've got January, February, March. And what we're going to work out here is when we receive the money from these sales. So this is our receipts. So the payment terms. Customers pay 40% in the month of sale, 60% in the month after. So, look at our January sale, £50,000. 40% of that is received in the month, so 40% is received in January. 40% of 50,000 is 20,000. So under receipts in January, we will receive 20,000. The balance of that, the other 60% of the sale, comes in 1 month later. So it will come in February. So 30,000 is received in February. Now we move on to our February sale, £40,000. 40% is received in the month of sale, so 40% of 40,000 is 16,000. That's received in the month of sale, so it's received in February. The balance is received 1 month later, so it will be received in March. So that's a further 24,000. Now, if we look at the March figure, excuse me, if we look at the March figure, £45,000, 40% comes in the month of sale, so 40% of £45,000 comes in March, so that's 18,000. The rest comes in April. We're not interested in that. So, the question asks, what would be the sales receipts for February? So let's look at our receipts column for February. £46,000. So there's our answer. Now, I strongly recommend that you use this method whenever you're working out receipts from customers where there are payments on credit, because this is such an easy way to ensure that you get your calculations correct. So we have £46,000, which is answer D. Question 14 is exactly the same sort of question. So I'm going to do the same thing again. So what are our sales? We've got May, 60,000. June, we have 110,000. July, we have 90,000. And August, we have 70,000. So now, those same months across here, May, June, July, August. And here we're working out the receipts. So the payment pattern is that customers pay 30% in the month and 70% in the month after. So looking at May sales, 30% in the month of May. So 30% of 60,000, 18,000. And the rest a month later. So the balance will come in June. So that's another 42,000. I've got one naught too many there. July, 110,000. June, I'm jumping the months. June, 110,000. 30% will come in June. So that is 33,000. And the rest will come in July. 77,000. Now look at July, £90,000. 30% is received in the month, so 30% will be received in July, so that's 27, and the rest will be received in August. Now we don't have to worry about August because the question is asking us what our sales receipts are for July. So our August sales will be received in August and September, so we don't need to do any calculations for that. So let's look at our receipts columns. What will come in July? 77,000 and 27,000. So £104,000. Answer D again. So hopefully you can see how useful this table is, and even more so if you were having customers that paid perhaps over 3 months. Maybe they were paying 10% in the month of sale, 40% in 1 month after sale, 50% 2 months after sale. By just drawing up this table, it makes your calculations much easier. So that is budgeting multiple choice questions looked at. We've now got a couple of absorption costing questions. Now, absorption costing was covered in term 1 and the exam is on term 2. But you may get some absorption costing within term 2, especially if you're comparing with marginal costing. If you look at the marginal costing section of the workbook, you will see that we compared absorption and marginal costing statements. So you do still need to be able to work out overhead absorption rates and know about under and over absorption. So question 15 is working out an overhead absorption rate. So your overhead absorption rate is always your budgeted production overheads divided by your budgeted activity. So look at our question. Budgeted overheads 866,250. Divide that by our budgeted level of activity. And remember, by activity we can be talking about hours, labour hours, machine hours, or we can be talking about units. So looking at the information that this question has given us, the budgeted activity is the budgeted hours, 45,000. So we're dividing by 45,000. That gives us £19.25 per hour. So that's our absorption rate, which is answer A. Question 16 is asking us to work out the under or over absorption. So we need to firstly work out the overhead absorbed. We know our absorption rate is £19.25, that's per hour. To work out the overhead absorbed, we multiply that rate by the actual hours. That's important. It's not budgeted hours. To work out the overhead absorbed is always the overhead absorption rate times the actual hours. So actual hours 43252. So we have absorbed 832601. What were the actual overheads? Back to the question. Actual overheads 857,500. So the difference is the under or over absorption. Well, we have a difference of 24899, and if we look at the absorbed figure 832601, that is less than the actual figure, so it's under the actual figure. So 24899 under, which is answer C. So we have one more absorption costing question, and again it's similar to question 16. So we've been given an overhead absorption rate per labour hour. We've told what the budgeted labour hours were, we're told what the actual overheads were, and we're told what the actual labour hours were. And we're asked again for an over or under absorption. So if you just look back at the workings for the previous question, to work out the overhead absorbed, I took the overhead absorption rate and multiplied it by actual activity. So overhead absorption rate £3.85, multiply it by actual activity. So it's £3.85 per labour hour, so we need actual labour hours, 24,000. So the overhead absorbed 92,400. What were the actual overheads? £105,250. So the difference is the under or over absorption. And again, if we look at the figures, we absorbed 92,400. That's less than the actual, so it's under the actual. So we've under absorbed. 12850 under. Answer C. So again, in this question, we were given one figure, those budgeted labour hours, that we didn't need. So it is testing that you know which figure to pick out of the question. So that's a quick recap over absorption costing. We're now moving on to relevant costing. As you should be aware, it was made clear if relevant costing appears on the exam paper, it will be as a multiple choice question only. You will not have a 25-mark question based on relevant costing. So if we have a look at question 18, a firm has a stock of 12 components. They were purchased for £26 per unit. The component is regularly used in production and the current purchase price is £28 per unit. Owing to the high metal content, each component could be sold for scrap for £20. The firm has received an order that would require 7 units. The correct relevant cost for this order is, and that's what we need to work out. So what is the relevant cost of the 7 units? With every relevant costing question, the first thing you should do is eliminate any cost that is not relevant. And that is any cost that happened in the past. So at this question, they have in stock 12 components and they purchased them for £26. So that has happened in the past. So that £26 is not a relevant cost. So we now got two figures. Is the relevant cost £28 or is it 20? The basic rule is that if these products are used regularly and are going to be replaced, then you use the current purchase price. If they are not used regularly and are not going to be replaced, then you use the scrap value. So our current purchase price is £28, our scrap is £20. But the important word, regularly. This component is regularly used. So our relevant cost is the current purchase price of £28. So that's £28 a unit, and the order is for 7 units, so 28 times 7 is 196. So relevant cost £196. Answer D. So if we have a look at question 19. So it's an order for 340 litres. So what's going to be the relevant cost? There's 400 litres in stock and they were purchased for £4.25 a litre. So that happened in the past. So £4.25 is not relevant. So what are we left with? The chemical is not regularly used by the business, and if not used on this job would be sold for £2 a litre. The current replacement price is £4 a litre. So do we use £2? Do we use £4? So again, important word, not regularly. So if it's not regularly used, it's not going to be replaced. So we're not interested in the current replacement price or current purchase price. Instead, we're interested in what we could sell it for basically as scrap. So that's the £2. 340 times £2, 680. Answer A. So you need to approach every relevant costing that way. Firstly, eliminate any costs that were incurred in the past. Look at what costs you're left with. Then look to see if the product is used regularly or not. If it is used regularly, the relevant cost is the current purchase price, or it may say current replacement price. If it is not used regularly, then you're looking at what we can currently sell it for, which is often referred to as the scrap value. Okay, so we are on to the last section, which is marginal costing. So marginal costing is quite a big topic within your workbook, and any parts of it can come up as multiple choice questions or as longer questions. There are a number of formulas: break even, margin of safety, target profit, contribution to sales ratios. You need to know them all. So the first question: a company sells only one product, selling price of £20, variable cost of 13, fixed costs are 125,000. How many units must the company sell in order to achieve a profit? So for this question, you need your target profit formula. And that is fixed costs plus the target profit divided by contribution per unit. So fixed costs, let's go back to the question, 125,000. Target profit 50,000. So fixed costs 125,000, target profit 50,000. And we need to divide that by the contribution per unit. And to work out your contribution per unit, it is your selling price, £20, minus your variable costs of 13. So divide it by 20 minus 13. And that comes to 25,000 units. So to achieve the target profit, we need to sell 25,000 units, which is answer A. Question 21, margin of safety. So the margin of safety in units is your actual or planned activity minus your break-even activity. So looking at the question, we're given the selling price, we're given the variable costs, we're given the fixed costs, and we're given the budgeted level of production and sales. So that's our planned activity. So for our margin of safety, we know what our planned activity is, 4,100 units. And we need to deduct the break-even activity, which we haven't been given, so we need to work it out. So this is another formula that you need to know. So your break-even is equal to your fixed costs divided by contribution per unit. So the fixed costs, £25,000, contribution per unit, selling price minus your variable costs. So 26 minus 18. So £25,000 worth of fixed costs divided by the contribution per unit, which is your selling price minus variable costs, gives us 3,125 units. So that's how many units to break even. So we can put that figure into our calculation. Margin of safety. Remember, all the margin of safety is how safe are we? We're making a profit if we can sell more than break even. So if we're breaking even at 3,125 and we're actually planning on selling 4,100 units, we know we're going to be in a profit, and we know therefore that we have a degree of safety. So our margin of safety is 975 units. Now the question is asking us for a percentage. So to convert our margin of safety in units into a percentage, we take our units that we've just calculated and express it as our percentage of our actual or planned activity. So 975 divided by 4,100. Multiply it by 100 because we want a percentage, and we get 23.8%. So when we're expressing it as a percentage, it is always as a percentage of our planned or actual activity. So 23.8% is answer B. So question 22, break-even point again. Okay, so here's our formula. Break-even is equal to fixed costs divided by the contribution per unit. So let's have a look at the question. Production of 10,000 units, selling price is £6, variable cost per unit is £3. So break even is equal to fixed costs divided by contribution per unit. So we know the contribution per unit is the selling price minus the variable cost. 6 minus 3. We just need our fixed costs. So we've been given the information in a slightly different way. Our fixed production cost is £1 per unit, and other fixed costs amount to £2,000. And remember, a fixed cost is a cost that relates to a period. It's also referred to in marginal costing as a period cost. So we don't want the fixed cost per unit, we want the fixed costs for the period. What we do know is that in this particular period we're going to be doing 10,000 units. So our fixed costs for the period is 10,000 units at £1 a unit, which is £10,000, plus our other fixed costs of 2,000, means we've got fixed costs of £12,000. So now we can work out our break even. We've got the fixed costs, £12,000. We've got the contribution per unit, so break-even point is equal to 4,000 units. If you are asked to calculate the break-even in revenue, remember revenue is sales, so the break-even in revenue is the number of units you're selling to break even, so in this example £4,000, multiplied by the selling price. So what will our revenue be? Well, if we're going to sell 4,000 units to break even and we're selling each of them at £6 a unit, then £24,000 of revenue is your break even. So this question was asking for it in units, so we've worked out 4,000 units, which is answer C. So moving on, question 23. 3, a firm is considering whether to continue manufacturing a component itself or buy in from an outside supplier. 4,000 units are currently produced each period and costs have been identified as follows. So we got material cost, labour cost, a direct expense, a fixed overhead. And the question is asking, what would be the maximum price the firm would be prepared to pay per component from an outside supplier? So this is basically a make or buy question. So what we need to look at is how much the product is going to cost us to make, and then we would not want to pay any more than that if we were going to buy it, because if it's going to cost us more to buy it, there's no point in buying it, we might as well make it. So the first thing to look at is how much is this product costing us to make. Now bear in mind this is marginal costing. So in all our marginal costing decisions we are only concerned with the marginal cost or the variable cost. So our marginal cost of making is the variable costs, which is the material, the direct labour and the direct expense. It is not the fixed overhead. That is not part of our marginal cost. So the marginal cost of making £2.25 plus 0.75 plus 0.25. So it's costing us £3.25 to make the product. So if we were going to buy it in, the most we would want to pay is £3.25. We certainly wouldn't pay any more than £3.25 because we can make it for that. So what would be the maximum price you would pay? £3.25, answer B. So, next question. Company's fixed costs are £14,000. Variable costs are £12 per unit. What is the expected total cost if the company produces 4,600 units? Okay, so what's the total costs? Well, we're doing 4,600 units. Variable costs are going to be £12. So that comes to 55,200. And asking for total costs, so we need to include the fixed costs as well, which are 14,000. Total costs £69,200. Answer D. Question 25 is another margin of safety. And if we look at the choices of answers, they're all units. So we just need the margin of safety in units. So just a reminder, margin of safety, it's the planned or actual activity minus break-even activity. So let's look at the question, pick out the information we've been given. So budgeted, so remember budget is a plan, so our planned activity 650. What's our break-even activity? We haven't been told, but we've been given enough information to calculate it. Break-even is fixed costs, 32,500, divided by contribution per unit. Contribution per unit, selling price minus the variable costs. So 140 minus 75. So what we have is 650 minus, and if we work out our break even, that comes to 500. So our margin of safety, 150 units. So that's our margin of safety in units. Right, and just a reminder, if that had been asked for in a percentage, we would then divide the 150 by the planned 650 to give us the percentage. So the answer is 150 units, which is answer B. And now we're on to the very last question. This is a popular marginal costing question involving limiting factors. So we've got a company producing 3 products, X, Y and Z. Machine hours are in short supply. So machine hours are our limiting factor, and the company wishes to maximize its profits. So we've been given some information and we're asked in which order we should produce our products. So this is basically, as I said, a limiting factor question. There are a number of steps that you need to go through. Right, we need to identify our limiting factor, and they've told us that in the question. It's machine hours. We then need to calculate the contribution per unit for each of our products. So we've got 3 products, X, Y and Z. So as you know, because we've done contribution several times going through these questions, the contribution is the selling price minus the variable costs. So if we look at the question for product X, we've got a selling price of £39 and we have variable costs of material and labour, so 12 and 24. So the contribution 39 minus 12 minus 24. So that is £3. For Y, we're doing 68 selling price minus the variable cost of material minus the variable cost of labour. So 68 minus 14 minus 36 gives us a contribution per unit of 18. Finally, Z, selling price £51 minus the variable cost of material minus the variable cost of labour gives us a contribution of £6. Then we need to identify how much of the limiting factor we need for 1 unit of each product. So we know the limiting factor is machine hours. So what are the machine hours per unit? And we've been given them 2 hours, 4.5 and 2. The next step is to work out the contribution per machine hour. Right. And a good tip is always to think of per as divide. So we're doing contribution divided by the machine hours. Product X, contribution £3, divided by the machine hours of 2. For Y, contribution divided by machine hours. And for Z, contribution divided by the machine hours. So what we know is product X gives us or earns us £1.50 per machine hour. Product Y earns us £4 per machine hour. Product Z earns us £3 per machine hour. Now if machine hours are in short supply, we obviously want to produce the product that earns us the most per machine hour. So putting them in order of production, we would produce product Y first. Then if we had machine hours left over, we would do Z because that earns us £3 per hour. And finally, if we still had some machine hours left over, we would do product X. So our order of production is Y, number 2 is Z, 3 is X. So Y, Z, X. So if we look at our choices, we're looking for Y, Z, X as the order, which is answer C. So that's the order of production to aim to maximize the profits. So that's the last multiple choice question. Obviously these are only examples of the sort of questions that you can get on the exam paper, but we have covered amongst these multiple choice questions all topics. Hopefully it has been useful to you and has helped you prepare for your exam. So good luck with your revision. If you've got any problems or queries, you can contact either myself or any other of the FMA lecturers. The details are all on the Moodle site. Okay, so thank you for listening, and hopefully I'll see you in year 2.